some of the strategies to deal with those lenders if you can't rely upon the federal program. One of the principal ways that we deal with these lenders is to make a business decision with them. We sit down and we decide what would be in everybody's best interest. And everybody's best interest is keeping you in your home. The bank does not want your house back. What they want is a stream of payments from you that are reasonable. Now, in some cases, that stream of payments is more than what you want to pay for this house. This is where it becomes important to decide on a budget and a strategy before we talk to the bank. Why do we want to pay twice the value of a house in mortgage payments when it's only worth half as much? If you bought your house for $200,000 and it fell to $100,000, you're going to be asking for a $100,000 principal reduction. It doesn't make good business sense to pay $200,000 for the same house. The bank understands that, and you understand that. Now, the fact that you don't want to leave your home doesn't mean the bank understands that. When we're negotiating with them, we let them know we're willing to leave if we don't get the terms that we want. Otherwise, they're driving the whole show. So, when we talk to the bank, we have a strategy for how much we could pay them and what we want as a principal reduction. We need to know what our house is worth today. Another strategy that we really have to talk about is how do we make the banks pay attention to what we're doing? If you're behind in your payments, the bank is much more likely to pay attention to you. They don't see a problem with your loan until it stops what we call performing or paying them every month. So although you can get a modification with many of these banks while you're current, the likelihood is that you're not going to get the response that you would otherwise get if you were behind or even in foreclosure. So, although I would never advise anybody to fall behind, what I would say is if you are behind, you absolutely can continue to do a modification. These banks don't want your house and they want to work out. The closer they get to a foreclosure or a sale date or to taking your property away from you, the more willing they are to work with you on a day-to-day basis. Let me say that again. The banks don't want your house. The closer they get to getting your house, the more they want to work with you. The better the deal is going to be for you. We're never going to tell you to miss payments, and you shouldn't miss payments if you can afford them. But if you have missed payments or you're falling behind, you can still get a modification. But one of the things we have to talk to the bank about when we're talking about strategy is if we're unwilling to take their deal, if our house has fallen from $200,000 to $100,000 and they won't give us a principal reduction, what are we going to do about it? Are we going to let them take the house? Are we going to make that business decision? You have to decide up front. It's a very tough decision. One of the things we talk about is even when your house is in foreclosure, it's not the end.